Hello everyone, my name is Manolis Sfinarolakis, the Community Manager of Patch of Land, and welcome to our latest monthly crowdfunding webinar on Chicago real estate investing. We have an amazing show today with three very special guests from three different crowdfunding platforms that will not only tell you about how their platforms support real estate in Chicago, but also nationwide. And we will also talk about a very special report that Patch of Land has created known as the Chicago Report, which is really the topic of our webinar today. For anyone who is watching across the internet, we have multiple ways for you to collaborate. You can collaborate, of course, on Google Hangouts if that's where you're watching us, by submitting your questions in the Q&A application. If you're watching us from Patch of Land's website or through the live stream in YouTube, you can also type in your comments and questions at each of those sites, and we will get to those questions as soon as we can as we go through the information. So without further ado, I would love to introduce each of our guests. First, I will introduce Jorge Newbery, the founder and CEO of American Homeowner Preservation. And Jorge, please introduce yourself to the audience.
Good evening. Thank you for the introduction. My name is Jorge Newbery. Our platform is American Homeowner Preservation, and what we do is we crowdfund the purchase of defaulted mortgages nationwide. We then work with those families to try to keep them in their homes with modifications and other solutions. However, many times the homes are vacant or the families do not want to stay, and we end up with vacant homes, which can then be renovated and are most typically not in the best of shape, so they're renovated and then sold to investors who renovate them and end up reselling them to put them back into service.
Excellent. Thank you, Jorge, for that introduction, and we'll definitely go into more detail shortly on your platform. Next, we have Jordan Fishfeld, the co-founder and CEO of PeerRealty. And Jordan, please introduce yourself to the audience.
Yeah, thanks for having me tonight. I'm Jordan. I'm the CEO of PeerRealty. We are an equity crowdfunding platform for commercial and investment-grade real estate, basically focused on creating investment-grade product for the broader network of investors, and like Jorge at HP and like Patch, looking to really democratize the investment process by bringing the minimum investments for these investment-grade products down to a reasonable level. We, like Jorge, are focused in the Midwestern and Chicago market, are headquartered here, and really look at product nationwide.
Wonderful, Jordan. Thank you for joining us this evening. And last but certainly not least, we have Douglas Cochrane, the Senior Vice President of Acquisitions and Underwriting at Patch of Land. And Douglas, please introduce yourself.
Hey, Manolis. Hey, guys. Thanks for having me on the show. My name is Doug Cochrane, Senior Vice President of Acquisitions and Underwriting at Patch of Land. Patch of Land is a debt-based real estate crowdfunding company that works with residential properties and now commercial properties as well nationwide, helping developers around the country buy properties, fix them up, sell them, reposition them, commercial as well, repositioning, and focusing on the debt side of real estate lending.
Excellent, Doug. Thank you for joining us, and you're a regular on the show, of course, and I missed you last month, so welcome back.
Thanks. Good to be back.
You got it. And great. So we are going to actually dig a little bit deeper into how crowdfunding is revolutionizing the online real estate financing market. So that'll take about another 5 to 10 minutes. But before I forget to mention, in 10 minutes from now, we're going to be going over the Chicago report to tell investors why it's such a very important report for you to know why Chicago is great for real estate investing. So for those of you who are watching right now, if you could take a moment, go to patchofland.com/Chicago. That's patchofland.com/Chicago, and download the report so that you're ready for it within the next 10 minutes when we go through it. So I'd like to actually begin with Jorge. And Jorge, I'm going to actually share my screen and go to your website while you explain a little bit more about how your platform operates. But really, what I like about your platform is that not only are you creating great returns for investors, but your platform is actually helping homeowners remain in their home. And so can you give us more information specifically about how the process works through American Homeowner Preservation? And can you see my screen right now?
I can. Thank you very much.
Perfect. So yeah,
Good to
please
see.
go and let us know. I mean, how do you initiate the deals? Like, are you purchasing pools of assets from banks that are non-performing assets? Kind of start from the beginning and then walk us through how investors get involved and how you ultimately earn returns for them.
Absolutely. So what we do is we'll purchase loans, and it could be one loan or hundreds of loans from banks, hedge funds, other types of sellers. I mean, we bought from Citibank, Banco Popular, FDIC, Guaranteed Rate, their originator, Carrington, a number of different sellers, and they'll sell us pools of loans. Families are not paying. Many times they haven't paid in years, and we focus on low to moderate income neighborhoods, and so those are the loans we get, and they're really the loans that the big Wall Street funds don't want, and so we're able to buy them at competitive prices. We then utilize investor funds to fund the purchase. We acquire them, and once we acquire, we actually have a branch of a national servicer in our office, and four servicer employees show up each day, and they will try to contact the homeowners, and if it's occupied and the family wants to stay, they do a modification and we start receiving payments. If they don't want to stay or it's already vacant, we'll offer them cash for a deed in lieu. If they don't respond, we end up foreclosing on the home. In those latter two outcomes, we end up typically listing the home with a local real estate agent, trying to sell the homes, and then oftentimes they're the rehabbers, probably patch of land clients, who can then utilize those funds to a patch of land loan to buy the property. We sell, they're typically discounted properties, and then renovate and either rent or resell. And the investor funds come in as we buy these loans. We buy almost every week. We're buying, a pool, and a pool could be a handful of loans, or again could be hundreds, and it all kind of depends on what's available. And that's more or less the process. And the revenue comes in, it flows down. We actually have three classes. So if you invest your money for a year, you get 9%, 2 years is 10.2%, 5 years is 12%, and the money flows. All the revenue goes to the third-party servicer. It's offsite. It's truly a third party. On a monthly basis, they'll sweep that money to U.S. Bank, which is our trustee, and on a monthly basis, they distribute that money to investors or pay expenses.
Great. And so just to also clarify for myself, the investors are ultimately investing in the fund that is purchasing these assets. You and the loan servicer that you work with are ultimately working to provide the returns to the investors by either making the non-performing loan performing, meaning the borrower begins to pay again, or if the actual assets which are being purchased at well below market value need to be sold or disposed of, you're going in and ultimately selling a few of those assets at a profit, which would then also bring in returns for the investors. Is that a accurate representation of a couple of the revenue streams?
Absolutely. Yeah, the two primary revenue streams are either payments or liquidations, liquidations being sales.
Got you. Payments and liquidations. Very good. And so in your scenario here, is this only available right now as far as the people who can actually invest and earn these Class A, Class B, and Class C returns? Are the only individuals who can currently invest in your platform accredited investors, or can anyone, regardless of income, invest to earn these returns?
Today, it's only available to accredited investors. However, we are working on a Regulation A+ application, which, when it's approved, will allow us to offer these same investments to unaccredited investors. And we're looking forward to that date. We hope it's in September, sometime in September. And a little bit of history. When we first started, we started as a hedge fund. Our minimum investment was $250,000. We went online. The minimum investment dropped to $10,000. Once we go Reg A, the minimum investment will drop to $100. So we think that will be that, coupled with the ability to accept investments from just about anybody will be compelling and be all-inclusive, somewhat crowdfunding for the 99% instead of just the 1%, or actually it's 4%.
Wonderful. So, thank you for that explanation. And actually, as we go now to hear more about PeerRealty, before we discuss PeerRealty, I'm going to actually ask Jordan to kind of give us a little bit of background on the Jobs Act. And I know that you, Jordan, as well, recently have written a blog about Regulation A+. So, but can you give us a little bit of a primer on the Jobs Act and why this is happening in real estate, how this crowdfunding movement came to be?
Yeah, sure. It's actually funny that I got my start in my career as an attorney and really kind of started following the Jobs Act early on. The Jobs Act was passed in 2012 with basically 3 relevant titles: Title II, Title III, and Title IV. Title II is basically what most of the platforms are operating under right now, which is a combination of traditional Regulation D offerings, 506B, and this new method of public solicitation of private equity in 506C. And so my platform operates under 506C, which basically allows me to publicly offer my investment opportunities to anybody. However, I'm limited in my investor base to accredited investors, and that was kind of what George was alluding to right now, is really the only people that can invest through crowdfunding are accredited investors, or the 4%, we'll call it. Title III, which was what I think everybody got most excited about when the Jobs Act initially passed, was what we all see as crowdfunding. It's the investments by accredited and non-accredited investors, limited only by your provable income and a maximum dollar amount. And we're still hopeful. I believe it'll happen in this calendar year, or the latest Q1 of 2016. But it hasn't happened for a number of years, so people call me a little bit of an optimist about that. And then Title IV, which George just spoke about, is Regulation A+. It basically took a kind of rarely used capital raising provision in Regulation A and eliminated some of the major barriers, namely the maximum allowed capital raise used to be $5 million. It is now $50 million. So it's a little bit more burdensome as far as upfront costs, but if you can raise $50 million, it becomes a really effective way to raise capital, and we're all kind of very excited. This actually passed earlier in the year, became available for submissions on June 19th, and we're still waiting for kind of the first wave of those to go through SEC and FINRA approval.
Wonderful.
So that's basically crowdfunding right now. And then additionally, and George and I can get a little bit excited about this right now, Governor Rauner in Illinois just signed the Illinois Interstate Crowdfunding Regulations that we had been pushing for and had passed the House a few months ago. And that actually happened today. There's some press about that in the Tribune, and should be a great new way for Illinois residents to invest in Illinois projects and Illinois businesses, hopefully kind of creating the benchmark and really playbook for states moving forward and allowing for interstate crowdfunding. So a lot of excitement, a lot of new opportunity coming through, and I think that'll also be tremendous for what Patch is doing and its focus on the Chicago market, the Chicago residential market, which I think is probably one of the greatest and most expansive residential redevelopment markets in the U.S. right now. So it's going to be tons of fun.
Absolutely, and just to clarify too for our audience, as Jordan and George mentioned, right now it really is an accredited investors game as far as the investors who can invest in the offerings on these crowdfunding platforms. But that does not mean if you're a sponsor, a developer, an operator, you don't have to be an accredited investor, which according to the Securities and Exchange Commission is someone who makes $200,000 a year or is worth $1 million in net worth, excluding their personal residence. So if you're a real estate developer who has experience, you can easily go in and raise money from these wealthy investors. you don't have to be wealthy yourself to actually bring a deal to these platforms. So I always want to make sure that that's clear, because a lot of people think it's only for the wealthy at present, but if you have the experience as a real estate developer, you will be able to take advantage of this in a very big way.
That's exactly right.
Absolutely. And so tell us a little bit about PeerRealty, and just to kind of share at least the initial difference that I see. I see George's platform, American Homeowner Preservation, really works on non-performing debt, and the revenue stream there is really working out loans or liquidating loans. PeerRealty is really focused on the equity side for larger real estate deals, is your primary focus. So give us a little bit of background and share with us kind of what PeerRealty is all about.
Yeah, so PeerRealty's mission going in was to really democratize the investment process, creating opportunities for a larger number of investors to take part in what we all believed to be wealth-building opportunities. So we went out with kind of that mission statement in mind. Obviously creating access, transparency, and that flexibility to invest. How you want, when you want, and what you want. And so that's how we see the entire crowdfunding industry. And our expertise is in the equity side of investment grade real estate. And so we spend a lot of time finding high quality investment opportunities. And reduce the minimum investment required to take part in these. So for a lot of investors out there, if they've seen a PPM or they've talked to their friends who are commercial real estate developers or acquirers, the minimum investment, as George mentioned, was probably $150,000, $250,000 to take part in a lot of these transactions. We've been able to reduce the minimum to $5,000. And even for the wealthy 4%, we'll call it, there was an overconcentration and an overallocation to specific real estate transactions prior to this kind of disruption in finance through crowdfunding. I can now take the same investor who should have $100,000 of investment in real estate, and instead of having that person, he or she, concentrated into one transaction in one geographic region with one sponsor, I would actually prefer that they spend part of their real estate allocation on the equity side, diversifying across different asset classes. And we do retail, office, and large-scale multifamily, and then take some of those dollars and put them into patch of land and diversify across asset classes and geography there. And similarly so with a lot of the other platforms. And I think that's the people who have gotten into crowdfunding early. I think that's where we see this beautiful collaboration coming together, and we all believe in diversification into direct investment in real estate, and really allowing that for the first time. I think we're all very aware that private REITs were not the solution and are not the solution. The TIC structure was a disaster, but we think this is really the way that investors can gain true diversification into direct investment in real estate. For the first time, and we're all excited about it. And for us, we see the investment grade product as what we're great at, and so that's where we focus. And George is great at what he does, and that's where he focuses. And the same with the guys at Patch. And I think that's where we really are how we're going to see this industry grow is by really focusing on where the expertise is and being with investing with those people. So,
agreed. Thank you so much for that. Thank you so much for that, Jordan. I really agree with everything you said. And yeah, I mean, so far it's amazing to see the innovation. It's nice to see crowdfunding platforms collaborating. There's 3 different platforms here, but because we all focus on a different niche, it doesn't have to be a combative situation, because ultimately we're all working for the developers, we're all working for the investors, and helping each other out is always a great way to collaborate. And so let me switch over to Patch of Land now. So Patch of Land, Doug, if you could please tell the audience a little bit about Patch of Land, and again, to kind of reiterate, the differentiator for Patch of Land is that they focus exclusively on debt-based offerings for residential has been their bread and butter for fix and flip residential, but they recently have also started financing commercial properties. So, Doug, please give us a little background on Patch and more about how the platform works.
Sure. I think George and Jordan kind of hit on a bunch of really great ideas of what's going on with how it all started with the Jobs Act and things like that, and each of us having a different take on crowdfunding, and there are a lot of different ways of presenting it and moving forward with it, and as far as the diversification of the different types of asset classes, the transparency. I think we're all very much. I think a big push for all of us is to work with each other in this industry. It's a growing industry. It's a new industry, and people have a lot of interest in it. And I think it's companies like the three that are here to work with each other and collaborate and solidify the platforms. And to make it transparent. That was a big thing with how we've always worked with our developers and our investors, is kind of pulling back the curtain of real estate investing, and in Jordan's case, in commercial grade real estate, people typically don't have access to that kind of investment opportunity, and his platform allows for that. And same with George's. And what we do is we take it from a debt side of things, and we're very transparent in the way we underwrite our loans and work with our developers. We're in constant contact with our developers, during the process and throughout the process, while they're renovating and things like that. And we also then take that transparency to our investors and show them how we came to our conclusion of why this is a great project to invest in. We show them, as you can see on the screen, we show them everything about the property. We show the appraisals, we show inspection reports and renovation budgets and the cap tables and things like that to allow our investors the opportunity to look at everything that's there and determine whether that's the kind of property that they want to include in their portfolio. So that's a big thing with Patch. As far as how did we start? It started with our CEO. He started in Chicago, so we've got roots in Chicago, and we've been fortunate enough to start getting some projects happening in Chicago, and with the whole revitalization of Chicago, as Jordan had mentioned. It's booming, and it's one of the biggest markets in the country, and it's ripe for developing and getting these projects up on their feet. And I think it's an exciting city for our investors to get into, to be able to diversify their portfolios in a very strong city. So. That's a little bit about Patch of Land, I guess. I feel like I'm kind of running on a little bit, but yeah, that's a little bit about Patch of Land and how we're situating ourselves in the industry and being open to collaboration with other companies out there and supporting each other and developing this industry. I think it's an industry that's going to continue to grow, continue to evolve. And it's an exciting time to be a part of it.
Absolutely. And I 100% agree with that. And what I will say, let me just check one thing here. Were you guys getting an echo there as well?
A little bit.
Yeah, if you don't mind just muting your microphones while I speak, that'll solve that issue. And so what I think this is a good actual segue to is, you mentioned, Doug, how Patch of Land has really gained a little bit of traction in Chicago, and so because of that, you ultimately, Patch of Land has ultimately commissioned the Chicago report. And so, as I mentioned to the audience earlier, this is the part of the presentation where we will go into the actual report and kind of all provide commentary on the amazing opportunity that Chicago represents. But again, if you want to download this report, all you got to do is go to patchofland.com/Chicago, and that'll bring you to the report where you can download and receive other information about upcoming events. And so, prior to this call, I actually asked the marketing team at Patch of Land, exactly how many deals has Patch done so far, and I got a few stats of about 11 deals funded from 6 different developers. And so, because of the demand that we've seen from that area, it's almost 10% of all the deals that we've done at Patch of Land. This report was created, and so what I noticed that the actual composition of this report is really focusing in on 5 or 6 key areas. One of the major areas, of course, is location. Chicago, of course, is one of the busiest transportation hubs in the world, with 50% of freight, and one of the busiest aviation centers, thanks to the Chicago Airport and Midway airports. And so, would anyone like to comment on how important transportation is regarding a real estate market? They're also very important, very busy in the Chicago Transit Authority. So from a perspective of an investment area, transportation obviously is a very important piece of that, because it allows the residents to easily move from place to place. So would any of you like to kind of comment on what that translates into as far as a good real estate market for investing?
I can add a quick comment. I grew up in Southern California, and I had a car since I was about 16 years old. And when I moved to Chicago in 2011, sold my car, and I have no car, which is amazing to be an adult and be able to walk and use the CTA, which is an amazingly efficient train system. What is odd is in California, there would be almost no value being right near a bus line or particularly a train station. In Chicago, I think if you're near a train station, it definitely adds a significant value to that real estate, and because it allows the occupants to get to and fro very readily, oftentimes without a car, and which is a huge benefit. It's financial savings. It's just more convenient, and so that would be one thing that you see in Chicago. I think that value add of being near transportation hubs. The other part is I moved here from Cincinnati, and I'll tell you that the convenience of having 2 airports, nonstop flights to just about anywhere, is a huge advantage to me personally, but I think for everyone else who lives in Chicago, it makes it a great place to both live and to work.
Excellent. Very good.
And on the commercial side, I think it's interesting because you can actually see a neighborhood's office and commercial property take form as newer amenities are added and better transportation is added. So we just had some upgrades to one of the stops in kind of the South Loop area, which immediately started and kind of a little bit before it was actually opened, buying and development on the office and large-scale condo side of things because of this new way or this new stop that would create access for that entire group of people to either live or now work there. And so we're seeing some great opportunities in some of the South Loop areas. But yeah, I think the transportation definitely adds value, and that's why when you're looking at Chicago from Patch's point of view, I think they're doing this very smartly in partnering with local developers. I think understanding the local makeup of Chicago is really important. There's a lot of things that make a neighborhood in Chicago great that you wouldn't really recognize if you're coming from somewhere else. And by partnering with these local developers to do single-family home fix and flips, Patch is putting itself in an unbelievable position to monetize on local knowledge. And so it's a unique attribute of what they can do.
Yeah, and if I can put my 2 cents in. Having local infrastructure, I think, is key to any city and to developing a city and expanding a city. In Chicago, I think it's got the second biggest transportation rail system in the country, and you know, as the millennials, the younger generation, is more interested in living closer to urban areas, and I think that's a vital component in looking at real estate now, and I think that's why you're going to see cities like Chicago really surge, having that kind of infrastructure where they can live and work in the same area. And as George had mentioned, he doesn't have a car. You know, people are enjoying that kind of lifestyle more. And you know, even as Jordan is even saying, you know, having developers who are recognizing that and building commercial office space and or you know, larger density condo buildings, they're recognizing that as well. So you know, that's where, you know, we're working with our local developers who are seeing that, and it's an important aspect, I think, of real estate, is seeing what's going on with the infrastructure. I come from Boston, and again, I only had one car in our family. Between my wife and I, we lived downtown. You didn't need it. We live in Southern California now, and it's a completely different story. You know, it's nobody walks here, so
yeah, no,
it's a different mindset. It's a different mindset, and but we understand that mindset in Chicago.
Yeah, you're absolutely right. So I mean, that was actually excellent feedback on the whole transportation. Another interesting piece that I noticed too regarding Chicago is, you know, as I was reading this, I didn't really understand, you know, what is a graystone. I've actually never seen the graystones before, but then of course, you know, you see a picture here of these beautiful beautiful buildings that were built in the graystone style. But you know, as I was reading, I was wondering, why is this in this report? Why is this important that the graystones kind of follow a similar building path, except for the fact that each one has a unique style on the exterior? So I guess I'll ask this to Doug again. You know, out of the 11 deals, have any of them been graystones? And even if they weren't graystones, why is it important to actually consider the architecture of a city for developers who may be able to use this for their benefit?
Well, you know, a particular architectural style is always important, I think, to a city. I think it helps identify the city, and it gives a connection to people within the city. You know, the graystones that they have in Chicago, we haven't done one yet. We've had a few developers that we are starting up relationships with, and they specialize in working with townhouses, and they've worked in graystone, so I'm actually kind of excited about that. And we just going back again to my Boston roots, you know, brownstones are the big thing of townhomes. It's the type of stone that's available to the area, and there's a lot of local pride, I think, in that. So it does help identify. You know, you don't get graystone everywhere. It's a stone that's located there. It's strong. It's like granite, and it's beautiful. The architectural detail in those homes, they typically were built in the 1800s, and the craftsmanship is spectacular. So, you know, developers who are looking for those kind of opportunities for those kind of homes, they have the opportunity to redevelop an absolutely gorgeous property architecturally, and that's something that I think people who understand Chicago and live there want a piece of that. And I saw that in Boston with the Victorians that we had there. They were highly prized for their craftsmanship and their and workmanship. So I can't wait for our first one, actually.
Absolutely, and one thing that I noticed as well is that it looks like, because they had pretty identical floor plans, it looks like for a real estate developer, they don't necessarily have to guess as far as what the graystone will look. It'll allow a developer to know the property, know how to fix it, know the building methods and the materials, and it could be repeated. And so, yeah, I mean, whenever Patchland does get a Greystone fix and flip, it's nice to know that if that person has had experience with it, it seems like a cookie cutter approach to development. Interesting. Did anyone else have anything to say about Greystones before we move on? Okay. Of course, Chicago has great education and business, but I actually would like to jump a little bit to some of the government initiatives and incentives, because whenever a city is going through a revitalization, such as Chicago or Newark or these other areas, government incentives and initiatives usually have a lot to do with it. So what I notice is that there's been a real push in multiple fashions here from the recent administration. Rahm Emanuel, I believe, is the current mayor. And so right when he became mayor, they actually were passing the American Jobs Act of 2011, not to be confused with the Jobs Act that actually allows for crowdfunding. This was a separate Jobs Act, the American Jobs Act of 2011, and it actually allowed Mr. Rahm Emanuel to make immediate investments of about $1.6 billion in Illinois that can support over 20,000 jobs. And so that alone, obviously, when you create jobs in an urban area, that's going to create economic activity, which then will allow people to actually purchase homes and support the economy. Have any of you? Does anyone have anything to add about this particular initiative? Since both of you, Jordan and George, live there, have you seen the benefits of any of this programs? Specifically, the investment in.
Yeah, I mean, I'll go. I think one of the great things that we've seen over the last 2-3 years from this current administration, both on kind of the mayoral side of things with Rahm Emanuel, and then now the newly elected governor, Governor Rauner, is a real push to create a central technology hub in Chicago, and kind of started with 1871, which, if anybody's familiar with any of the tech scene in New York or DC, it's an incubation center for technology and innovation, and what we're seeing is, because of the support from the government and some of the corporations in Chicago, and a desire to really create a central hub of innovation in the Midwest, we're seeing great growth in jobs and in new companies. We've seen now, I think, 2 or 3 graduates of 1871 add thousands and thousands of jobs during their growth phases and into their maturity. I think a lot of that stemmed from really a belief from the Emanuel administration and from the Rauner administration, and specifically the Rauner administration, as evidenced by the crowdfunding bill he signed today, that they want to support small businesses and innovation and really growth in the technology sector. And as a result, I think we're going to see kind of that, as Doug mentioned, the urbanization of the millennials and growth and movement towards city centers, and so I think we've all really seen the benefit of that in really a strong Chicago-based economy and growth in the housing market, and then really growth in everything that results from that. So it's definitely been witnessed by those who are here.
Wonderful. Yeah, it's really nice to see that. I mean, 1871, and Doug, maybe correct me if I'm wrong, but is that where Patch of Land started too? I'm not sure if that was it. I know there was some sort of incubator that they started.
Yeah, no, Jason started out of 1871. We had discussed it. I think the last time Jason was in Chicago, we got to walk through 1871 together. And I think when he came, it was like a half of a room in the merchandise mart, and now it's almost 2 full stories. I think they're now like 200,000 square feet, something like that. So they've definitely seen a tremendous growth, and it was fun to hear, when Jason was talking about his experiences in 1871 and how it's grown and really become what it is today over the last few years with the Emmanuel administration. But yeah, I think two major crowdfunding platforms coming out of 1871 isn't a bad start.
Great, that's excellent. As the audience can see here too, there's another program. This one might have more direct impacts to housing. The 5-year housing plan, it's the Bouncing Back program, and again, this is ultimately providing about 1.3 billion to create, improve, and preserve more than 41,000 units of housing. And so this program includes a purchase rehab, tax increment financing, and maybe George, you might be able to kind of let us know kind of what that is, or someone on our panel. But basically, they have tax increment financing up to 35 million over 5 years, and they have a pledge to hold neighborhood level workshops to educate contractors and developers. So, what does tax increment financing mean for a residential rehabilitator?
My familiarity with tax increment financing is typically they would set up and correct me if either of you know more, but I believe you set up a special tax district in which there are, to the extent there is increased tax revenues generated by this new development, and that it's reinvested in anything from block watches to local security to local improvements and whatnot. You often see this, particularly in commercial. I haven't seen it much in residential. I would think it would be more like commercial residential mix. Jordan, have you seen much of TIF financing locally?
Yeah, I mean we've had deals come across our desk. It's not actually something that we've dealt with much on our platform at the moment. Mainly our focus being kind of investment grade, high grade, Class A and core. These TIF products are generally not in that class. As we see the encroachment of neighborhoods and the expansion of some of these programs to benefit certain districts, it's something we'll look at, but it's just not something we do right now.
But certainly, any designation as a TIF district will likely end up resulting in improvements and increased home values in that area.
Excellent. And just to remind our guests too, please remember to mute your particular microphones when someone else is speaking. One other program that I see here is called the Large Lot Program, and this is another very interesting initiative, and I believe it's in more than just Chicago area. I know that I believe in Connecticut, if you were to go to certain, the assessor's office or the real estate offices in Connecticut, you might be able to do this as well. But this is for city-owned land that is made available for only $1 to property owners who are local. So, I mean, this large lot program definitely has a lot of opportunities for redevelopment, for actually building new units, and so it's ultimately providing a lot of different opportunities to not only earn a profit, but to revitalize communities that just have vacant land that isn't being really used to generate revenues. And so, Doug, was there anything you wanted to say in particular on this? Have you seen anyone use the large lot program, and whether through patch of land or through your years of experience? And Doug, you may need to unmute your microphone as well.
Sorry about that. Trying to play by the rules here. We haven't worked with anybody who has directly used the large lot program in Chicago. We are obviously aware of it, and we are aware that it's also happening in other cities as well that are looking to do a lot of redevelopment. I know Inglewood is one of the areas in Chicago. We have actually invested in that area. We have had a developer in there working on projects in the Inglewood area. And actually, come to think of it, that might have been a gravestone, our only gravestone, I think, actually, now that I think about it. And that's been a very successful project. There was about a $113,000 loan, and that when we put that up on the site, it filled in about 30 minutes. So
Wow.
people saw the value in it. So we're excited about it. We want to do more of it.
Excellent. Very, very good. So, I mean, just another reason, again, that Chicago is just really doing everything they can to get their vacant lots, filled up again, and to get the city generating additional revenues. Additional things that are occurring in Chicago, they continue to invest in actual refurbishments. So, I mean, part of the Chicago Housing Authority, they're ultimately trying to create, and renovate over 25,000 housing units in Chicago to make the city landscape look better. Because, of course, in every big city, I'm sure that there is some spots of the city in Chicago that are not as rosy as we'd like them to be. So, for Jordan and George, do you see, just from being in Chicago, I'm sure that when the Great Recession occurred back in 2008, I'm sure there were a lot of pictures of buildings with boarded properties. Are you starting to see a lot of these old eyesores being transformed into much better properties and kind of income producing and part of the tax roll again?
I don't know if you want to take this, George. I actually lived in Manhattan during the Great Recession, so I don't know that I can talk to the transformation, but I definitely think that we're seeing a lot of growth in the fix and flip rehab and a lot of the non-performing mortgage houses getting turned. But I'll let George speak.
Yeah, I also wasn't here in 2008, but I will say that Chicago is a huge city, and there is still a long way to go. So although there's probably a reduced number of board ups, there's still a huge, tens of thousands would be my guess. And I know because we own some of them, and we own loans on them. We end up getting deeds in lieu, or we foreclose on them and end up selling them to rehabbers. But there's a lot, and there's concentrations, neighborhoods like Englewood. There's portions of Englewood and a lot of the South Side where there's big concentrations where there may be a high percentage of a single block may have 30, 40, 50%, sometimes more, are boarded up. And unfortunately, a lot of those are owned by banks, big banks, and they, in many cases, in their mind, they've decided that foreclosing or taking much further action on some of these homes just doesn't make sense. And as a result, the home sits there vacant, boarded up, and there's not that much that can be done except for eventually a tax sale happens, and it extinguishes the mortgage interest, which will then put that, maybe it ends up creating some of those dollar lots, or they end up selling those types of loans in a pool to us at sometimes for $1. We buy the loan, and then we try to extract whatever value we can. And it's a challenge. And another part in the city of Chicago in particular, they're pioneers in holding lenders accountable. So if you own a mortgage, like we own dozens in Chicago, they'll actually, if the homeowner's gone, they'll ask and request and enforce that the lender takes care of the property. So we're responsible for snow removal, for lawn care, for keeping the property boarded up and secure. Even sometimes they ask you to have a night watchman if it's been prone to break-ins and stuff like that. So those properties that I'm describing are the ones that need renovation, and that's why I think there's a huge opportunity in Chicago, because there's just so many, tens of thousands of these homes that could be great homes, and probably at one point were great homes, but with the Great Recession coming in, a lot of those families weren't able to stay and thought they were going to be imminently foreclosed, and they left, and then the property was vandalized and ended up dilapidated and an eyesore, boarded up by the city, and now it needs someone to come in and clean that up. And it's really these efforts, patch of land, in particular, because you're providing the ammunition, which is the cash to these developers. it's essential because those homeowners that are still there, that there's half of those homeowners are still in the home, still in their homes on those blocks. Those families are hoping that someone fixes that eyesore that's next door that is dragging down property values and is a magnet for crime. So it's an important effort that the government can try to enforce things, but they can't really force people to fix the homes. They can offer incentives, but there needs to be this private efforts, which I think have been stepped up with, or are being assisted by crowdfunding.
Absolutely, I concur on that. I mean, there's only so much a government can do to make the environment more friendly. But then obviously you have to have private companies come in to really take it the rest of the way. And to your point, more than 39,000 residential properties were somewhere in the foreclosure process at the end of January 2015. So you're right. There's a lot more work to do, but of course that means more opportunity as well. That's down 35% from last year, which means that this number was much higher. So it just goes to show that the inventory is dwindling and the deals are getting harder to come by, which means that the market is definitely a competitive one for developers. And so that's a very good point. With all that happening, of course, even though it's slowing down, Chicago is still a very good market. There's a lot of reports coming out there that show that Chicago is becoming a hotbed for house flipping. According to this report by Cranes, the average house flipper in this particular area code in Chicago had a gross return of over 154% in the fourth quarter of 2014. And that's the fourth highest among all zip codes in the United States. So Doug, as far as the deals that Patch of Land has funded, are you seeing that these are just incredibly profitable deals for the developer and the investors alike?
Absolutely, and there are a lot of opportunities, and even as George had mentioned, there's these neighborhoods who you have people who are homeowners, and there's they're hoping that their neighborhood will turn around. These are the people who are the fabric of the neighborhood, and even this one that we did in Inglewood. It was a fantastic deal. I mean, he did a beautiful renovation, and whoever buys that property, they're going to live there for free. They'll get a healthy return on the rent. They can live in it, and you've got a beautiful home that's been fully renovated. There's massive opportunities here in Chicago, and that's why we're very bullish on it. That's why we wanted to write this report, to get the word out that Chicago is an exciting and vibrant city, and we've of the deals that we've done, we've been in. I was just writing some of them down: Berwyn, Oak Park, Tower Lakes, Inglewood. There's opportunities everywhere. And has it become more competitive? Yeah, but have foreclosures come down since last year? Yeah, but there's still so many opportunities out there, and George sees it with his company. The returns are there, the opportunities are there, so that's why Patch of Land is there. We're there to help local developers turn these places around. I mean, that's how we started. That's why Jason started the company. He was in Chicago and he saw these areas, that could be vibrant, and he saw the opportunities that were available, but no place or no way to do it, and that's why he helped with the Jobs Act and helped push that, and started our company. And we're happy. We're delighted that we're able to do that kind of thing. The government can only do so much, and now it's an opportunity for investors and developers to contribute back to their communities and make a return on it. And we're glad to be part of it. So there's plenty of opportunity in Chicago.
Absolutely. And I'd like to actually let Jordan comment on this as well. We've been talking a lot about residential, but the economy is also showing us that the commercial activities are huge. And as we see here, the formerly known as the Sears Tower, which we all knew, was recently sold to Blackstone Group at a valuation of 1.3 billion. So, are you seeing a lot of commercial activity right now from the purchase and sale in the Chicago area, Jordan?
Yeah, I mean, that was definitely a marquee trade, and we had one earlier in the year with I think it's 220 LaSalle that was also I think had set a record prior to that on a per square foot basis. Yeah, I mean, as I mentioned earlier, I think with the growth of the economy and really the growth of jobs that we're seeing in Chicago from the focus both from the government and I think just from the population and really making technology the Midwest center for technological innovation, that creates a greater demand for office, and we're seeing that. I think right now, if you look at the Chicago skyline, it'll be different in a year than what you're looking at right now. I think we have two major office buildings with Class A tenant anchored, moving into kind of the gateway to the West Loop, and I think what we're seeing is it's a direct result of the growth of these smaller incubated businesses, like Patch coming out of 1871, like others. We had great successes with Groupon and Grubhub and there's Avant, I think, is around here. Raise, I mean, some really great Chicago companies. And as a result, we're going to see more need for office, more commercial space going on, and trading. But yeah, I think it's definitely a great time to be in Chicago, both on the commercial side and really on the residential side.
Absolutely, and it's exciting to see the big deals as well. One thing, as you were talking, I was just looking at this graph here, and I think it needs a little explanation. The red line, which is kind of the trend line for the single-family home index, this is a Case-Shiller index, is the price line, kind of the pressure for prices to continue on this trend. As we can see here, for the single-family homes and the condos, the actual numbers, this is on this side to the right is the 2014, we see that there was a major dip, of course, between 08 through 2010, 2011, and then it looks like here it's hit the bottom. So I mean, I'm sure this holds true as well for commercial and generally, but it looks like it's now time for these prices to go up, and they're starting to slowly. It's nice to see the graph here to kind of show you historically what it's been, and the fact that it has a lot more ways to go to kind of get back to the trend of where it should be.
Yeah, and I think that I think the commercial space hit the bottom a little bit faster, and we've started our kind of growth, but not obviously against the Case-Shiller Home Index, but against historical pricing on U.S. Treasuries as it relates to Class A properties. There's still some room for cap rate compression, and so I think we're still going to see some price increases on the Class A primaries, and as that becomes priced at equilibrium, we're going to see prices start to move on your Class A secondary and tertiary, and then down the line. So I definitely think we still have some room in this cycle, and it's a really a great time to become part of the real estate investment community, and that's what we can do with crowdfunding, right? We can really expand the available opportunities for investors to take part in what has historically been wealth creating opportunities. I mean, this is what real estate has always been and what it continues to be, and before it was wealth creating opportunities for the really, really wealthy, right now it's wealth creating opportunities for accredited investors. And as you know, George is excited, as we're all excited, it's soon to be, you know, wealth creating opportunities for just the everyday investor. I think as we push and get Title III done and Title IV and Reg A Plus finalized, there's going to be just tremendous opportunity for the investor base to really take part in all of these types of transactions, from single family fix and flip to, you know, the Class A office building, and some of the, you know, we're doing some Class B central business district office in Chicago, which we're really excited about, and you know, we're going to see really all of that opportunity, and so it's very exciting.
Absolutely, and you know, I really do think that there is a very bright future ahead for Chicago. I guess I'll open it up. I'll open it up to the panel as well, because I know we're past 9 o'clock, so we've been on for a good hour, and the conversation is just flowing. So it's been really a good discussion. Is there anything that we didn't mention about Chicago, whether it's on the commercial or residential end of it, that you feel would be important for our viewers to know as to why Chicago is a thriving economy? Was there anything anyone wanted to add above and beyond everything else that we just mentioned? Okay, it looks like we've gotten everything mentioned. I'm looking for some questions. I see here there weren't any questions that were asked as of right now, but ultimately it looks like we've gone through the report and we gave everyone the information. I'll just repeat it one more time. You can download the report that we just went through, patchaland.com/Chicago, and also if there happens to be anyone watching in the Chicago area tonight, on August 5th you'll have a chance to actually learn more about real estate crowdfunding in person. Both PeerRealty and American Homeowner Preservation, along with Patch of Land, will be in downtown Chicago on August 5th. The event will be from approximately 5:30 to 8 o'clock Central Time, and that'll be at WeWork at the Fulton Market in downtown Chicago. So if any of you are there, please either visit the website, go to patchaland.com/Chicago, and you'll see the information there as well. We encourage everyone to attend. It'll be a great event, and so I think now we'll just kind of have some closing remarks as we end our webinar. You know, George, again, thanks for joining us. Just give us some parting words, and also let people know how they can contact you in case they'd like to contact you directly.
Sure. Our website is ahpinvest.com, and you can always call us at 800-555-1055. And yeah, Chicago's a great place. We welcome you to visit. Hopefully you'll be here next Wednesday. I'm sure it's going to be an informative and entertaining evening. And wish everyone a good night.
Excellent. George, thanks for joining us. We'd love to have you on the show again as well. Jordan, any parting words, including contact information?
I really appreciate it. As you can probably tell, I'm fairly bullish on crowdfunding and real estate in general. Excited about what we're able to provide for our investors. You know, if you're out there, you're interested in you know, investment grade real estate opportunities, feel free to visit the website. It's PeerRealty.com. That's PeerRealty.com. All of our contact information is there, and like Patch and like AHP is because we're operating as a 506c portal, you can actually feel free to browse all of our actual transactions, and if you're an accredited investor, invest tonight. So you know, definitely take advantage of the new public solicitation opportunities. I know we're all excited about it. So thanks again for having me, and we'll see you August 5th.
Excellent. Jordan, thank you again for joining us as well. And yeah, we definitely look forward to seeing you on August 5th. And Doug, of course, any last words from you as well?
Yes, unfortunately, I won't be there August 5th in Chicago. Just too bad. I'd like to get out there. but we will be there. Patch of Land will be. You can obviously come to our site, patchofland.com, sign up as an investor or a developer, borrower. Come take a look at the projects that we've done. We have them all on the site. You can review them, see the types of properties that we invest in, the whole rundown of the properties, the transparency, all that. If you've got questions, please feel free to reach out to me directly. I can be reached at doug@patchofland.com. If you're a developer who has property that you might want to have us review, again, you can send it to me directly, and we can have one of our originators walk you through the process. As an investor, come take a look, see if the types of offerings we have fit your portfolio needs, and by all means sign up as an investor to participate.
Great. Thank you, Doug. Pleasure as always. And again, thank you to all the guests. To the viewers out there, again, thank you as well for watching today. You can get additional information, patchofland.com/Chicago. Any questions that you didn't want to ask during the webinar, feel free to reach out to Doug or any of our guests, as well as to community@patchofland.com. And until next time, this has been our 7th monthly real estate crowdfunding webinar, and thank you for joining us this evening. Have a wonderful night.